Yo, what it do, YouTube? It's your boy MB, ready to do the daily breakdown of the S&P 500 on the futures market. Oh man, where do I start? Today was a massacre. So for a while, I was looking for the sell-off. It finally came today, so let me show you where the best entry points were. First, I'm going to show you a gold chart. I want to start with FOMC. FOMC on gold, we had this giant push up, and then shortly after, we actually retraced the entire move, and then we ended up finding this demand zone right where those same buyers were. And ever since then, this was last Friday, gold has been on a massive tear. So I was just waiting for the major indexes like the ES and the NASDAQ to do the same. And that finally happened today. So looking at ES on a 4-hour chart, you can see FOMC, we had this giant push up. We began to pull back, but then from there we ended up making a higher high, a new all-time high at that. And then today is where we get our sell-off. So yesterday we started to see all those failure patterns. We see the one right here that failed. And so I'm going to get into the nitty-gritty of a 5-minute chart and show you a more in-depth look at the sell-off. All right, so here's a 5-minute chart I have yesterday pulled up. This was an area I already had marked out from yesterday. We rejected it at like 5 p.m. And so I was already anticipating this area to act as resistance overnight. I actually texted my chat saying that I might want to try a short at 94. I ended up canceling my order because I was like, well, maybe we'll come up here to 300 and then sell off from there. So when I woke up, I see that we rejected this 94 and then we ended up starting to sell off. So I get up around 7 o'clock and I start to notice this pattern forming. Basically what happens is we have the support level, and once this breaks, it ends up retesting and then it rejects. So it broke here, we retested it, and then we sold off. This became our new low. It was acting as support for a little bit. We broke through it, we retested it, and then it rejected. Find a new support zone, break below it, retest it, and then it sells off. So from right here at 7:30, again, I was thinking about taking this short, but I just checked my phone and I was like, I'm going to pass on this one. But I've seen this setup happen before. So I was like, if it happens again, then I'll probably take it. It ended up happening again at market open. So this was actually the first play of the day. So we find our new low, we break below it, and then whenever we were tested this area again, it goes to 51 or 50.5 regardless. This was the first entry, and it was a quick 10 points in 10 minutes. From there, we actually hit this demand zone, and this was the actual demand zone that I've been speaking about, which is this FOMC candle here. So the start of this FOMC candle, so that's our demand zone. Now, you could have entered here right away. I think it would have been a high-quality setup, but along the way of this downtrend, there were a few other demand zones that ended up not holding. So I wasn't too confident in this spot. I wanted to make sure that it acted as support. And so once we got this bounce here, I ended up taking a long here somewhere around here around 37 and then re-added at 38. And I was anticipating, okay, well, maybe this wick right here will form an inverse head and shoulders. So this is ideally the entry. After this demand zone, we form a higher low, and it's basically an inverse head and shoulders pattern. So then from here, what I wanted to see is this pattern play out in reverse. So basically act as support. So here we have our support level, and you can see the next time we retested this area, it ended up acting as support. Now this pattern wasn't nearly as clean as the one on the downside, but if you put the swing low right here, you can see we bounce on here again. And even up here, it ended up acting as somewhat of support once we broke out of this high. We broke below it, but these moving averages ended up holding as support. And so I was able to actually catch a decent piece of this up move. I think I caught a little under 20 points. It was pretty slow and it was hard to hold. It literally gave me a headache because I was trying to sell the entire time. But finally, 30 minutes before the close, I hit my breaking point and I finally just sold. But looking at this chart retroactively, I bet you this spot right here was probably a good entry. I think it's probably going to be like a 50% retracement from right here. So if I put a fib retracement tool from the bottom to this high, down here, it was a little over a 50% retracement, but we ended up getting these crucial closes above the 50% mark. So you could have honestly entered here at 46, and it's basically a bull flag pattern. So I'm going to go ahead and add this for entry number 3. So basically right here, we had the break and retest. That was play number 1. The inverse head and shoulders, that's play number 2. And then this bull flag right here, that's play number 3. So that's pretty much it. Quick breakdown. We're finally starting to see some structure returning to the market. So these plays are becoming a little bit easier to point out. Looking back at this gold chart, you can see we have this massive move in the coming days. So that's kind of what I'm expecting ES to do. If I go to a 4-hour chart, we're still way down here. So if we have a move similar to gold, it's going to push us somewhere in the 5,500 levels. And so I'm not saying that's going to happen tomorrow or even this week, but maybe this month or next month or in the coming months, that's the target that I have in mind. But that's pretty much it. I'll catch you tomorrow. I love you.